The TSX has continued its outperformance against the S&P 500 so far this year, with the big Canadian tech stocks coming under pressure recently. Can that run continue? Joining us now to discuss is Michael O'Brien, co-head of Canadian Equity Portfolio Management with TD Asset Management. Michael, always great to have you on the program, especially when we got a lot of Canadian earnings to sift through.
Yeah, it's been a busy week. Thanks for having me on.
Okay, so we have had this outperformance continuing in from last year. As I take a look today, we're not having a great day. Shopify, some of the other, I guess we've seen as AI plays in this country, have definitely been underperforming. How should Canadian investors be thinking about this?
Well, I think if you look at the composition of the Canadian market and compare it to the composition of the U.S. market, if we're comparing, why would Canada outperform, underperform, I think what you need to realize about the S&P 500 in the U.S., roughly 5% of their index would be energy and materials combined. Whereas, to give you a sense, Apple is 6%, Microsoft is 5%. So those one tech stock is the equivalent of the entire energy and materials, composition of the market. Come to Canada, energy and materials are about a third of our market, so vastly different. Right now, the big pain point year to date has been technology, and two drivers really. One of them is more relevant for Canada than the other. The one that's not as relevant to Canada but is a big deal is investors' anxiety around the CapEx spending at the big hyperscalers, Google, Meta, Microsoft. Astronomical CapEx numbers coming out. And so there's a growing anxiety among the investors that, okay, are you spending this because you want to? Are you spending because you need to? When are we going to see a return on this? I just happen to notice all your free cash flow is gone. So that's the one big thing that's been unnerving investors. The second thing, which has had that spillover into the Canadian market, and you alluded to it earlier, this role of artificial intelligence as a disruptive force. So AI, artificial intelligence, we seem to be in this rolling wave of panics where what will AI disrupt next? Which business model, which industry? And software obviously has been in the teeth of this, but it not just confined to software, it sort of spreads around from day to day. But that's been the second big debate or the big issue that's really been holding up the technology space. And because technology is such a more important role, a bigger component of the US market, the Americans feel the pain more than we do. A lot of investors who had been quite happy owning these big tech behemoths and real juggernauts, as they start to get unnerved and they look for a new home for their money, if you're taking a little bit out of Microsoft, which is a 5% position, and trying to put that across all of the stocks in the energy and materials space, it's kind of like you pour a little bit of the bathwater into a measuring cup. It doesn't take much to spill over. So I think that's what we're seeing. And so in Canada, I think we've been benefiting from the fact that people running away from technology, there's not a lot of technology to run away from in Canada, and there's a whole lot of commodity exposure that they can sort of flee to, where people are thinking, well, chances are AI isn't going to disrupt a copper mine. AI isn't going to disrupt a natural gas well. So I think that's kind of what's been going on under the surface. And so as long as that, I would call it an AI shakeout in technology, continues to be the dominant narrative, the Canadian market looks like a relatively better place to be.
When I think about the AI disruption, they might be disrupting, or potentially, we don't know the extent, perhaps this is a bit overdone, but the AI is still there doing the disrupting. The AI is energy hungry. We have things in Canada that could probably, help feed the world's energy needs.
Yep, yeah, absolutely. I mean, if you just think about Cameco in the nuclear space, nuclear power seen as one of the potentials, or one of the components to solving this need for power for the big data centers. Cameco is a global leader, so that's a great example of that. We've got tons of natural gas up in Western Canada looking for a home. You see speculation about data centers, potentially AI-driven data centers in Western Canada. Lots of natural gas to fuel it. So you're absolutely right. There are a lot of potential beneficiaries.
So this might be one of those stories you look back in a couple of months and say, remember the big bouncy, action in the markets because of all the AI anxieties as we came out of winter, but then we're going to head into, we're in the middle of it right now. The trade irritants don't go away. We're going to have to renegotiate the USMCA, Coombs said at some point. How important is that to the Canadian market?
Well, I think the USMCA renegotiation, revisiting that, I think that's going to be the defining thing for the Canadian market this year. I think it's hugely important not just for the Canadian market, but especially the Canadian economy, that hopefully, I suspect this is going to be a very bumpy, rocky journey. I think most people have reconciled themselves to that. But
the Gordie Howe Bridge was part of all this until it was.
who would have seen that coming,
was.
right? It seems to get more ridiculous every time you read a headline. Unfortunately, I think that's only going to accelerate until we do, get to a deal. So my hope here is that if we can land a deal some point in 2026, that would do a huge amount to remove a lot of uncertainty that's hanging over business makers' decisions in terms of, where to spend that capital, which workers to hire, which factories to build. So in my opinion, this is going to be a pivotal thing for the Canadian economy in 2026. If we can come to some sort of a reasonable landing spot on USMCA, then I think that's going to be a real positive for Canada.
Is there a house view of us eventually finding a path here and it'll be bumpy along, or is it getting harder and harder now to sort of be optimistic that it'll be dramatic, but we'll get through the other side?
I think that's still the prevailing view, which then you worry about, am I being too sanguine about this? Am I too complacent about this? Because I don't think it would be a stretch of the imagination to see these things going off the rails, at least for a time. But I think everybody has been trained to believe that, not out of his own, not out of a concern for Canada's well-being, but more from just blatant self-interest, that the U.S. and the Trump administration, whether they want to admit it or not, they do need a trade deal. They can't afford to, with affordability being the number one issue heading into the U.S. midterms, blowing up the USMCA and putting tariffs on however many goods coming across the border does not seem to be a way to address that. So I think just from sheer self-interest, the cards do favor Canada that we will arrive at a reasonable, if not amicable, solution to this.
We put all of that together. Are we going to be sitting here in December or January of early next year saying, wow, look at us outperforming the Americans again? What are the odds of that?
I think it's a pretty reasonable possibility. I think it's a pretty reasonable possibility here. Like I say, if we're into a period of time where the real economy is beginning to get off the mat, and it seems to be, some of the more recent labor market and PMI data out of the U.S. is encouraging. We know there's a lot of money coming from the Canadian spending on both defense and a lot of infrastructure projects. We know there's a lot of spending in the United States for tax cuts and business tax credits. All of that stimulus should be, lifting the North American economies. And in that kind of an environment, I think, the strengths of the Canadian market lie in, building and moving things.